Hi guys and welcome back. On the 1st of December we directly started really bad into the month. Something broke in the markets and nobody was paying attention. I will show you exactly what this is, if the worst is over or if it will get much a bigger problem than many are anticipating. This and more in today's live stream. Let's go. Oh, sorry, that took a little bit. So I will jump directly into what's actually happening and why Bitcoin dumped so crazy to the downside. I know some people are saying, yeah, there's like technical reasons for that, Ichimoku cloud, whatever, or not. No, the real reason has not directly something with Bitcoin to do and has more something to do with what's going on in Japan. Because in Japan, what is going on here now? I get here a lot of... Okay, that's fine. So Japan is potentially hiking their interest rates. So why is that such a big problem for all other markets? So for this I have to move the mic a little bit over here so I can actually see what's going on the screen. So here, the Japanese bond market sent a clear signal this week. Here the country's 2-year government bond yield touched 1%. So we're actually way higher than 1% now. So, and this is the highest level since 2008. Now, why is this such a big problem? Because if we're getting here with a 76% chance, the Bank of Japan hiking rates on their December 19 meeting, expect that the markets will move way lower than where we are today. So now, why is that such a huge problem? Because Japan gave credit, basically, loans at 0% for many years. And now since last year, they started to put interest on that because they, at some point debt is getting so big, you know, that they struggle to pay it. The debt is now twice their GDP at 20 trillion yen, which is roughly $200 billion. So now you have to understand, you maybe think, oh, $200 billion is actually not that much for a country. You have to understand where that money sits. That money is mostly allocated in foreign assets because every country was going and borrowing from Japan at a 0% interest rate. Why does that affect crypto? Because also crypto players went to Japan and got money to play with. Now, when they are playing with this money in a way where they're exposed to market volatility, they have to unwind their trades because now they have huge swings in their position because of the interest rate hikes that occurred already. And now we have an announcement basically telling everybody, hey, there's potentially another one coming, and that is spooking now the global economy, and they are slowly unwinding and de-risking their positions. So here, just that you see that, I took here the normal conversion calculator. 20 trillion yen is roughly $130 billion, but people are saying there's way more debt than what you see on the surface. So you can almost double that. So I was like, okay, I want to kind of go into the middle. So it's like what I expect is like around $200 billion. Now, the Japanese 10-year treasury is one of the measurement points to understand how bad things actually are right now. We are sitting at 1.8%, which was before 0.5%. So that means now the risk basically for everybody that has taken positions while they borrowed money has tripled since they have borrowed the money. Because at the moment where they were borrowing at 0%, the treasury, the 10-year treasury in Japan was sitting at 0.5%. So now we're at 1.8. So that's almost a 4 times increase, and that means also their positions are now 4 times more at risk than they were before, based on that volatility, because they need now to cover the interest on the positions that they have taken. So, and you see this also now reflecting in the Nikkei. When the Nikkei goes down markets tank. We know that for a long time already. We saw this the last time occurring here on this big crash. Remember here that March crash? That was really bad for the market, where the Nikkei just tanked completely to the downside. So, and then found a bottom and started to climb back here into higher levels again. Basically doubled, almost doubled in the span of like 9 months, more or less. That'd be 8 months. So now we got another big crash, considerably big, in today's candle here. And this is, of course, now a potential precursor of what's to come by the midweek of this month, you know. So, and here you see what I mean. These are the interest rates, Japanese interest rates here in 2024 until February. They were negative. Then in March 2024, 0.1, still fine. Nobody was paying attention. Everybody was like 0.1, it's fine. But here 0.2.5, that is where people got scared and already started to unwind their positions. And then, of course, then here in January, the 0.5 jump, that is where people start panicking. So, of course, markets settle, you know, after a while. But if we get another interest rate hike here in Japan, another 0.25% or even 0.5%, imagine the devastation in the market when this is happening. Because now all positions that have loaned money from Japan, they're going into ultra high risk now. They need to de-risk even further, and that's where this whole problem comes in with the unwinding of that carry trade that the last time we spoke about 9 months ago, when we had this big crash in the market. So at the same time, you see also the dollar yen pair collapsing. So that means the yen gets stronger, the dollar gets weaker, and this is exactly also what we see on the dollar index. So here we are moving now in direction of the 99 points mark, but this is not how we wanted to get here. You know, we did not want to get here by Japan starting or people that have borrowed money from Japan starting to unwind to positions, weakening the dollar while everything goes to shit. So, but what is now the outlook here for Bitcoin in the short term? So first of all, we have a massive problem because here on the weekly chart, Bitcoin looks now like that we are having here a bearish order block, and this will be confirmed if we close the current weekly candle around $85,000 or here like $87,000 in that range, would confirm that bearish order block, and that would then potentially lead to a move all the way down here into the bear market bottom range before I expect that the market properly settles and goes back to the upside. So here, this does not mean that the bull market is over if we get down here. You know, it only means then what I mentioned here a couple of weeks ago, that we get a time expansion where we are just getting an excruciating amount of time where we're moving sideways in that range here from like $75,000 to $100,000 approximately, before we get then a significant move later in Q1 of next year. So the only way to prevent this is if we actually close here at $88,000, $89,000 above this line and getting continuation past the monthly key support at $94,000, and only then we would continue a sustainable uptrend in Bitcoin on the macro structure. Otherwise, you have to prepare yourself that this year is now a serious target for the price action over the next coming days and weeks, especially if Japan will increase the rates. So you see here also on the Fibonacci retracement levels here, we are holding on by a thread to the $85,546 level. Once that level breaks, expect a retest here of that low. Best case scenario is that we are just getting close to it, putting in a higher low, and then reversing back to the upside. So if we completely take this out, we're going to definitely put in a lower low, and then you get here somewhat of a relief bounce. But then I think we're going to struggle to go anywhere close and back to like $90,000. So right now, our trading stance, because of these global economical factors, has completely changed. You know, it's now everything is upside down, and only because some people got too greedy took too much debt. Japan did not pay attention. Were sleeping at at the wheel, and now everybody else has to pay the price. We always talked about we will only see these levels if something crazy happens, like a black swan event. There's your black swan event, you know. So if we are getting here a rate, an interest rate hike, this is the black swan event that nobody wanted to be happening, and it isn't actually happening. The good news is, if you buy around these levels where you're going to crash to, you will not see them for quite a long time, I bet. And the other thing is, once that is out of the market, it's done, you know. So there's nothing else that could be be compared to something like this, you know, because even the ETFs they're selling right now, you know. So everybody thought Wall Street will be the saving grace. They were gonna gobble up all the Bitcoin when people start selling like crazy. No, they're actually selling with them right now. So that it's a good and a bad thing, you know. So from weekends, coins go back into diamond hands, and once this is all settled, which is definitely just a short-term phenomena, then we are going back to the upside. So here on the daily chart, let me see here. On the daily chart, there is maybe a W formation forming, but that would mean that we stop breaking lower than $85,000 basically. So we cannot break below this, and we need to see here by tomorrow, after tomorrow, some early reversal signs back to $90,000 basically over the course of this week. This has to be happening, and the underlying VPVR cluster here from $85,000 all the way down to $81,573 needs to hold. So this cluster needs to hold. If this is not holding and we break below this, then we go definitely into the mid $70,000 area. So I also don't want to sugarcoat that, you know, because as a trader, you need to be able to adapt fast when things are changing, and this is exactly what we are seeing here right now. When we're looking then here on the daily chart, here an early, really early bullish sign would be if we close at least above this upward sloping trend line here, because overall the signal and the trend line on the MACD, they're not looking that bad. The RSI definitely looks not good, because we are back in oversold conditions here, which adds a little bit more merit to my opinion that we are seeing here most likely by tomorrow a small bounce, at least back above this trend line. So here you can actually see a little bit better how this might be to turn out here into a W formation. But we need to wait here now a couple of days. What you don't need to wait for is to learn directly how to read the market, especially in situations like that, because that took me like 5 minutes to figure this out this morning, where this dump was coming from, because I knew it was not like crypto market specific driven, you know, so that there was an outside fact driving that. So the launch is happening here right now of my mentorship program, guys. There is a link in the description where you can directly apply. There's 27 spots left, 3 are already gone. So be quick here, because yeah, we have not a lot of capacity, and yeah, you have to go through an application process. You know, it's not guaranteed that we're gonna take you just because you fill out the application. Because I want to work only with a small group of people, and I guarantee you I'm gonna make you profitable in the next 3 to 4 months. Now, on the 4-hourly chart, also here you see why we're hanging on by a thread here by this former support level, $85,600 roughly, but this doesn't look good here that we are actually able to hold this. This looks more like that over the next coming hours we're gonna break here below this, and then best case scenario you come back above, just have a deviation, and then get a retest of the EMA ribbon. But there I also think that we're gonna fail and then move lower. So, but it gives you the opportunity to potentially take a long trade here from like $84,600, $85,000, and play the retest of the EMA ribbon, since it just flipped bearish again. So here this outline is completely now for the toilet, because Japan thought it's a good idea to flip the whole market upside down. When it comes to the MDX algo scalp gradients, also here we are entering now a turquoise-ish colored gradient again. That is not a reversal color, you know, so we are definitely gonna enter now here into a light, like here, into a neon green phase, and need to wait again for dot plots. And what I have not seen really in a really long time, I cannot recall when I've seen this the last time, was here a supercell tag. You know, so I remember the last time when we had here a super buy tag, but a supercell, I have no idea when that happened the last time. I actually have to go back and look. So this is a really massive strong sell signal that we got here from the $91,000 area. And like I said on the EMA ribbon chart, here we are just holding on to this level currently, but I think that here, and this is from where you can take long positions right now for fast scalps, is here this buy cluster from 84,600 to 83,500. That is the range from where you want to build now long positions with a tight stop at like 82,700 there you want to have your stops. So, and like I said, fast, you know, fast positions. So, and not even to 91, you know, so I have to look, but I think it's like 89, yeah, 89 to 100 is what we're looking at. 89 to 100, kind of like here, there. So your risk to reward is basically 1 to 4, 6%, 6.1% to the upside, 1.37% on a stop loss. So here I would use like 10x leverage on a trade like that, just to be safe, you know. So it's still enough money, you know, on that we can make on that bounce here. But I really believe that if nothing insanely bullish is happening here right now in the next coming days, that this will be a rejection level for continuation. Yeah, below $80,000, at least in the short term. So I'm not saying we are staying in these low levels, but we definitely going to go down here. And another factor for this is the reactor indicator, putting in already here the early stage of like here, this green wave that we have here, this bottom wave. We got a 1 dot plot, but this is usually a way too early one. And we need here these two in a green wave. That's what we need to mark here a local bottom before we get another leg to the upside. Until then, I'm not looking for swing positions until then, you know. So fast scalps, yes, like the one I just gave you, but otherwise not looking at anything else. Here on the 50 minutes chart, currently also looking like a good W formation that is shaping up here, but also here we need to move back to the upside quickly. Here in the next like hour, we need a retest of the 200 moving average. Is it the, I think this is the 50. Let me see here, 50? Yeah, 50 moving average. A move back to the 50 moving average, $86,550 is what you're looking for. Yeah, and then we take it from there. If you want to trade with me, guys, we're trading here in this trading competition. Don't forget this. And we are about to share a prize pool of like $80,000 just by taking part in this. And it's so easy to do this, guys. Plus that you get to all the bonuses. Here, $30,000 worth of sign-up bonuses and $400 immediately just for binding your phone, email address, and downloading the app. And another $400 if you deposit $500. And if you deposit the $500, you get also access to this Telegram group here, where I send signals and most of the time find coins that are running even now, you know. So in all this mess, there is everything explained in the description. If you cannot reach me on info@amcrypto.us or on Twitter, AMCryptoAlex. If you cannot sign up on WEEX, sign up on Tapit, same thing. Now, the liquidation levels, we have now taken out all the over-leveraged long liquidity that was slightly stacked below us, just below the 50 moving average on the 4-hourly chart. The problem that I have with this here is that it looks like that we are coming now down to take here all the other liquidity that's also stacked here, all the way down to like $82,000 approximately. I'm not saying that this is happening today or tomorrow, but I think the more people realize what is potentially happening here, the more people are going yeah, to get spooked and gonna take positions on the other side here, and drive this into into these liquidity pockets. So here on the short side, on the other hand, the over-leveraged short positions, more and more people take profits here. See, that cluster was filled a couple days ago. This here was completely filled. This is now gone. So they all took profits. Wherever their take profit targets were, they were hit in that move to the downside. That's why they evaporized basically. So here is still a little bit, but also here a lot is gone. And also over here, it gets thinner and thinner. So here this we can also remove right now. We can remove this because here's also nothing anymore. So you see here why $90,000 is now a potential target. And then here, short liquidity from here. So we're going to get up here. Then we're going to get rejected again. Putting in another lower high. And then continue this downwards trend. So at any given moment where we're going to find strong support to get this bounce, it will stop here, in my opinion, which will then also most likely coincide with the 200 moving average, because that is now trending to the downside and will get at some point into this liquidity range. And then, yeah, then it will maybe coincide with a touch of it, with continuation to the downside. So right now we need to be here extremely bearish until proven otherwise. Also here on the liquidity heat map, let me put this up here. Just don't want to move out of. So, so here the only good thing is to the downside, there is not much to be taken anymore. There's like another billion basically. Yeah, another billion worth of liquidity all the way down to like $80,000. Below this, there's nothing. But look here to the upside. 6.2 billion basically, if we go back to $112,000, which is sounding now really, really far away. So, but even if we go here back to like 94, is 1.31 billion. So, what do we have here around 91 or 90, 91, 700? There's like 700. So, yeah, right now, definitely, when you just look at the spread, you know, so like a $10,000, what is this? A $6,000 move would cause us to liquidate $1 billion of longs. And when it comes to shorts, if we would get again also a $5,000 move, more or less the same. So then we are like 700, you know, 700 million liquidating. So right now there is a little bit overweight to liquidate more longs than shorts. But again, this is a short-term phenomena that we are seeing here before this is starting to reverse, you know, because this liquidity cannot be trapped here forever. You know, at some point we have to go and grab it. So, and we're definitely going to take advantage of that. Yeah, guys, that's basically for today's video. There's no real point in talking about altcoins right now because everything gets hammered. And I want to try to keep these videos short, yeah, and juicy and compact. And tomorrow, potentially, we're going to talk about altcoins again. Thank you so much for tuning in here. Don't forget, guys, smash off the like button, hit the subscribe button, hit the notification bell, and I'll see you hopefully still with a portfolio tomorrow.